Well, the opinions of some Brazilians there on this big stock market rout that's centered in China. We're joined for more on this by Marc Ross. He's the co-founder and partner of Caracal Strategies. Marc, one of those contributors there probably nailed it, saying we're maybe overly dependent on China. We get most of our goods from there. Do you think people are beginning to learn a lesson in these emerging markets that maybe they are now a little bit too dependent on China?
I think the China story actually is a bit overplayed. I know that it's been getting a lot of attention, but I think if you look across the board at the fundamentals, price of copper, the price of oil, the Baltic Dry Index, the Canadian dollar, for example, they're all at record lows. Even if you look at even developed markets, what Pfizer did to close out the year to buy Allergan, doing inversions, Dow, DuPont, merging. There's really, across the board, I don't see a lot of opportunity for growth, and I think it's being reflected in markets in Beijing as well as in New York.
Are you saying there's more going on that with low oil prices, low commodity prices, that China is just one part of this puzzle?
Absolutely. I think China is definitely a big part, but it's only one part. The World Bank, as you know, released a report just recently, and 42 of the 46 commodities that they track are all at record lows. This is having a huge impact across the whole global economy.
Okay, well, before we get too gloomy, is there anything that these countries can do? One, explain this for me, Marc. Traditionally, emerging economies devalue their currency when China devalues its currency. We've got the dollar surging.
Correct.
Most of these developing economies and emerging economies settle their trade in dollars, so you've got a cheaper renminbi and a strong dollar. Are they stuck between a rock and a hard place?
I really think they are, because there's only so many ways to inflate the economy, and I frankly think what the Federal Reserve has done over the last few years, keeping the dollar or the interest rates so low, you've had tons of cheap capital flowing around the world. And eventually those bills have to come due, and you're seeing it. A lot of overexpansion, overcapacity, as the last guest said, just in China alone, the expansion of the industrial complex, you're seeing a slowdown because there's no more markets. There's nowhere to sell that stuff. You can only grow for so long.
In the case of a country like Brazil, which is really dependent on commodities and exports of crops and that kind of thing, you're saying commodities at record lows, oil, now we've got stock markets tanking. What do they do?
I think it is a huge challenge. I mean, I'm a huge fan of Brazil. It's a great place to visit, great shoes in the Havaianas, great soccer team. But Brazil's a classic example. They've done, in some ways, all the easy things. They haven't evolved to like that next level. There's no great Brazilian technology company. There's no great Brazilian automotive company. I think for too long, these emerging markets have been so dependent on commodities, whether it be cheap components, natural resources, selling T-shirts. They really haven't moved up the economic value chain. I think they're paying the price.
It's maybe a contradiction in terms to talk about a safe haven with emerging markets. That's where people go for risky investments because they know the returns can be good. Is there such a thing at the moment, an emerging economy that might be considered a safe haven that investors can park their money for a while?
I think the interesting thing about markets, a lot of it is timing, correct? I mean, I'm in my 40s, hopefully I'll be working for 20 more years. So this may be a great opportunity to buy some world-class companies because of the prices are coming down. And there may be a great opportunity to make investments in Indonesia, Vietnam. I think India is a great opportunity. I think even if you look close to the US, Mexico and Chile are very interesting. So I do think there are opportunities out there. I do think the key, though, is how long is your time horizon? If your time horizon is only 12 months, I think 2016 is going to be a bumpy ride.
You're saying it may be a better bet to buy household names, maybe like Coca-Cola, these well-known world-class stocks, as you say, rather than perhaps the riskier.
Correct. If you look at Netflix just yesterday, they committed to 130 different markets around the world. And that's a pretty big bet, right? Even this week at the Consumer Electronics Show, if you look what General Motors and Ford are doing, making big bets on self-driverless cars. These are big, long-term, multi-decade bets. So I do think there is excitement out there. But if your time horizon is tomorrow or next week or next month, it's going to be a bumpy few weeks.
So it's maybe time to get into the driverless car and take off, quite literally. Marc, many thanks indeed. Marc Ross from Marc Ross there. Thanks very much indeed.